me turn off my tunes. If you like the music on my streams, it's actually me. You can find me on SoundCloud, just like a Red Bed. Let's see. Cool. We got a couple people in the room already. Oh yeah, you already got a question about the room. So, I'm in the Trade and Perform room, which is run by my coach Simon. Here, I'll give you the contact info again. I don't want to do too much marketing, but we trade futures, index futures, and we use the execution algo that Simon and the team has developed to find proper trade setups with like a systematic. We're discretionary, right? We don't auto trade, but we use a systematic process to determine where to trade. So if you email my coach Simon, his email is down here: trade the letter N and perform at gmail.com. You can tell him that you follow me and let him know that I said that you could get a free week in the room, and yeah, he'll let you in there and you can see what we do, and whatever questions you have, Simon will answer them. But you'll realize that the algo is a little bit complex and it's different than your typical candlestick chart. It's not just for analysis, it's to help us identify immediately whether or not we have a trade set up and where our entry is and where our stop would be. So realize we're not trading news, we're not calling, it's not a trade alert system. It's you're not going to go in the room and just be told what to trade, but Simon will teach you how to find trades every single day without him there. So yeah, it's a pretty cool group. It's pretty small, but I do believe there's still spots left. If you're a serious trader and you want to learn to be more systematic and disciplined, it's the only method that I've found that's gotten me consistent. So I'll give you that much. Like I said, I don't want to spend too much time talking a ton about the algo or the room, but I know it's a little different. But I've got a list of stuff that I want to review, primarily just how I'm expanding on the algo to find additional like filtering devices using basically the same signals, but adding some of my own to help me better pick, like be better at discretionary decision making. So the basics of the algo, you don't need to know everything to trade this. You just need to learn like one setup. And the setups are, for instance, patterns of these visual signals. So an example of a short would be a pink bar that's immediately followed by a star, that it's in the right location for a short, right? And I'll explain that in a minute. Also, pink bars followed by orange bars that are in proper locations from shorts can also give us shorts. The inverse of that is a purple bar followed by a green bar for a long, or a purple bar followed by a white star. They've got to be one after the other. Needs to be bullish for them to work. And it's been bearish here for a bit. Let's see if I can find one. Right here. Purple bar immediately followed by star. If it's bullish, it'll go higher. We generally target around 10 points, 10 to 15 points in ES for our first take profit. We can hold runners, but we have ways to identify whether or not we should or not. And that's another thing that I'm going to demonstrate in a minute, by identifying what zones we expect to get responses from and which ones we don't. And then how to know whether or not there's momentum in the market and whether or not it's balanced. So, like I said, those are just quick examples of patterns, but like you'll see them once you learn them, you see them everywhere. Like they start to show up, and it's just like, oh yeah, I see. They lead to a movement. And keep in mind, like, this is a 24 tick Renko chart, right? So each one of these Renko bars, it's range based. It's not time based. So if I look at this, so let me just get rid of the lines just to show you how this works. So your entry on this long would be once this star closes, and your stop goes a point underneath it. So your entry is, let's say, like, just to be fair, like 76. and the bottom of this is like 59, so maybe 58, right? So it's, it's usually about a 16 or so point stop. Sometimes it depends how long this wick could be, and then we're gonna target about 10 to 15 points higher. So it's nearly 1 to 1 for our first scale, and then whatever else we get for a runner. But they're all built like that. So even on the inverse, right, for this one, pink bar, orange bar, you're gonna have the entry here and the stop here. Now this Renka bar closed a little bit smaller. So here your entry is 81, your stop is let's see, 93, or no, sorry, the other way, 95. Right, so it's a little closer to 15 points, which is the average. And so let's see, what did I say it was? Oh, 81. Did I say 91? 81. So a regular target would be 71. That would be our first scale, and you'd hit that right here. Keep in mind, NQ is $20 for every point, right? So like 10 points, if you got to realize that that these amounts add up very quickly, even if you're only trading a handful of contracts. You don't need, in futures, you don't need to buy this and sell this to be profitable. You can sell this, buy this, and be done for the day. Right? It doesn't matter what the market's doing if you can figure out where the turns are going to be. If that makes sense. Hopefully that makes sense. So, like I said, I'm not going to go too far into what all the signals mean because it doesn't matter. But I'm going to show you how, if you already knew some of the patterns, which, like I said, in the room everybody learns them one at a time, and you master one, you get really good at it. You know exactly how it looks. You know exactly how to execute it. You know where to put the stop. You can do it in your sleep, and then you add another one. But so I'm not going to show you anything. I'm not going to change anything that Simon's already been teaching. But what I want to demonstrate is that there's some tools that not everybody in the room is using because it's complicated when you start to add more aspects to your trading. If you have to add more decisions, you also add the chance for complications, right? So there's sort of two schools of thought, and it's kind of a spectrum. On one extreme of the spectrum is where Simon is at, and his viewpoint, and I think it's totally valid, is if you can just get good at and become an expert at finding one setup, and that setup has a 72% win rate, for instance, like our trap back in trade does, and you could get 10 to 15 points 72% of the time you trade it, why would you skip any of them? Just take them all, and every opportunity you get, just get your play that game if it's going to pay you that much. Just every time you can pull the trigger. And I like I said, game theory wise, he's totally right. Right? If I was a machine, if I was gonna like program this to automatically trade for me, it would have to be a little bit more sophisticated because there's definitely some decision making to be done beyond just is there a pattern or not. But if I was going to do that and I was able to automate it, he's right. If I can get a 72% win rate on a trade setup, and even if it only sets up 3 times a day, I'm just gonna take every one, because in the end, as long as the drawdown is no more than maybe 4 stops in a row, you don't really ever have even like 70 points at risk, even if you took 4 stops in a row, and you're gonna make that up in like 3 trades. So it's the important thing is to realize that from a game theory point of view, he's right? And so I'm not arguing with that. But what I'm saying is, as a trader who didn't develop the system, it's harder to have confidence in every single entry, because if you've had some experience trading, and I've been doing this for almost 7 years now, like I know almost too much information about trading, and so my brain will see things that give me a bias and make me believe that this is going to be the trade that's going to stop, and so I shouldn't take it, and then it works. Or vice versa. I decide to be more aggressive because I think I see something totally unrelated to the process that says that this is actually a time to break my rules, and then it stops, right? And that's just human, right? That's just what we do. We're just not perfect, right? We're not perfectly disciplined. So while one solution is just work on, refining your one skill until you're such an expert at it that you don't deviate from it at all and you can just run it like a machine, like that is one solution. But a solution that's been working really well for me is, because my brain needs that extra, it's, I know it's going to be identifying other aspects. I'm going to start to see that, like, I have trap buyers up here. I'm going to start to see that we're coming back into value area low, right? Like, I know all that stuff, so I'm going to see it. And then when the algo says, let's say, like, if this was a buy and the algo was like, buy this, and I'm like, hell no, I'm not buying that. It's not bullish, right? And then it goes and gives me 15 points. You feel like a doofus. It's just like, what am I doing? And then you start getting more aggressive and you start taking trades even though you really shouldn't be, right? So instead, rather than leaving it up to my brain to guess whether or not this might be the time that it works and this might not be the time it works, instead, what I've been doing is I'm finding alternative, an additional supplemental information that's totally objective, right? In the same sense as, like, whether or not there's a triangle here or not, or whether or not there's a star here or not. I'm just programming it to say, are there other conditions at this point? Some of it's not programmed yet, but the ideas are already to the point where they've been back tested, and I know they work. It's just a matter of teaching the system to give me a signal when I want it to, but I can manually do it. And so if I can filter with those, with an additional, like, supplemental simple system, relatively simple system, whether or not I should be getting long or short in a certain location, um, then I can kind of like feed that part of my brain that wants to know what's going on and wants to filter out some of the trades that just look like they're not going to work. And I can then use that to just add additional rules. So while Simon may be comfortable taking a trade that sets up here, let's say it didn't set up, but if it did, looking for a long, if my system said, no, you can only be short here, then I don't take the long trade, and instead I would look for the short. So if he's buying this green bar, I might be shorting this orange bar based on the additional supplemental information. And like I said, so far my results have been really good. So I'm going to share. I've actually got 3, if I've got time and interest. I've got 3 different ideas basically that are all based on volume. And what's cool is this first one actually, if I'm not going to code it for you, but the pieces of it are actually more or less available out of the box on Sierra Chart. So you don't even have to have technically the algo to make this first idea work. It works a lot easier when you have the algo. But what you'll see is, you technically wouldn't need it to, like, introduce it to your own system. So the first thing we're going to look at is the most complex one, by the way. But it's also kind of the most cool, in my opinion. So this is something called the volume zone oscillator. Okay. You can add it to your Sierra charts by going to studies and then go all the way down to V on the standard studies that are available, pick volume zone oscillator and hit add. I can show you the settings are not password protected because they're straight out of the box. I literally didn't touch this. And I'm just using it as it is for now, and so far it's okay. It doesn't really seem like it needs any adjustment, surprisingly. Even for the Renko bars. Usually these studies need a lot of adjusting to make them work properly on Renko bars. It's actually working better on Renko than it does on candles. Straight out the box. The difference is I'm not using it in the way that most people might use it. I'm using it to identify areas where I may have had some capitulation. And that is giving me it's basically producing a tool that can identify locations that I want to look for either continuation trades or reversal trades. And I'm going to show you how to tell the difference between whether or not you should be doing a mean reversion trade or a continuation trade. So The first thing to look at is all these lines, right? You actually don't need all of them if you don't want all of them. The ones in the middle are the least useful, and the ones on the outside are the most useful. So if you, the way it has it set up is if it goes far enough away, whoops, it's this bottom one. If it goes far enough away, you've got two way down here, see that? And then there's one right near the zero line, and then there's this one right near the zero line, and two way out here. So what I'm going to do, because the outside two are the ones that really matter, the one thing I'm going to change is though they call them overbought and oversold levels. I kind of hate that term, but we're just, like I said, I'm gonna call it what they call it. So we're gonna make that that overbought level 3 yellow, and the oversold one we're gonna make it red. I might have done it the opposite on mine. I don't remember, but one way or another. That's the only change I'm gonna make. Oh, and I'm gonna do it with both of them because, like I said, the middle one, or the other way to do it is just to hide the middle one. So level 1, we can just hide. Let's just do that because I'm not really going to use it. And then oversold 1, we're going to hide. Okay, there we go. A little easier to read. So we'll save that. All right, so taking a look at that, what it is doing, first of all, what this volume zone oscillator, what the information, I can explain it to you because it's not anything, it's not proprietary. It's, you could look this up if you want. Every time we get more selling than buying, it's going to go down. And anytime we get more buying than selling, it's going to go up. And I mean, there's always the same amount of buying and selling. But when I say buying and selling, I mean when the aggression is on the sell side, when there's more activity on the bid than on the offer, it's going down. When there's more activity on the offer than on the bid, it's going up. And it's accumulating basically points in either positive or negative, and it's the midpoint is 0. So as you get more and more selling and less buy aggression, it's going to go deeper and deeper. And then as you get more and more buy aggression and less sell aggression, it's going to go higher and higher. Okay, we're not going to sell. Make sure you understand this. We're not going to sell just because it's like touching a level, and we're not going to buy just because we're touching a level. I realize in retrospect it sometimes does look that easy. I promise you it won't work often enough to have any edge doing that, so I don't recommend doing that. You'll get totally smashed when it's going in one direction. Okay, so the two things we need to keep track of for this are, first of all, we want to watch for whether or not these peaks and valleys are making new lows or not, or making new highs if they're going up. And then we also want to look at whether or not price is making new highs or making new lows. So in other words, we're looking for whether or not the indicator is divergent to price. So if price is making let me find one. If price is making new lows, but the oscillator is making higher lows. See that? Higher lows, higher lows, higher lows, lower lows, lower lows, lower lows. Again, not a buy signal, but it's going to be important in a minute when I tell you that there's a rule about divergence. So that's divergence. That's bullish divergence. Bearish divergence is the exact opposite. Higher and higher on price, lower and lower highs on the oscillator. Whoops. See that? That's divergence. Okay? You're by far, if you want to pick out of the box the way to use this, it's wait for divergence when that oscillator is really far away from the 0 line. Out of the box, that's going to be your best case scenario. There's way better ways to use it, but in general, this action where it gets all the way up here and then it puts in divergent highs where price is making higher highs or vice versa, if you then have an order flow confirmation down here, you're probably going to be able to find a sell spot. Okay, I'm not personally just selling because there's divergence, but if you want a simple way to find where you should be bearish, that might be a good place to start, right? The other thing that's really interesting about this is that when we make peaks and valleys, um, primarily when those peaks and valleys are further than the previous one, so when we're getting more and more bearish volume, or when we're getting more and more bullish volume, regardless of what price is doing, the higher the volume goes, basically, or the more distant it is from neutral, the the, the easier it is to trap that side of the market and reverse it. But the interesting thing is, well, I shouldn't say easier. It's not easier. The the point where that reversal will happen gets more and more advantageous, right? So a very simple way to find this is let's look at the way down, because down is just a little bit easier than up. It's usually how it goes. I want you to look at where the lowest point, where this oscillator made the very lowest low. Okay, I made it right there. See how there's a red line right there? Okay, so we're going to use that red line. And remember, you wouldn't see it in advance. You wouldn't know that it crossed the red line until right there. Okay, so that and then you'd have confirmation by this point that yes, it definitely did at least touch, if not cross, that lowest line. We're not buying it because of that, but hopefully you can see that that's actually the first time that's happened in this entire down wave, right? It got pretty low. It got below this line, but it never got below the red one. And now it's gotten below the red one. Okay, the further it goes, the more lines it can hit in one direction. The pivot point of where this market is going to start to be viable for rotations back up. Again, if you're trading in a way like we are, where you are able to take profits at 10 to 15 points for NQ, or 3 points on ES, if you can make money doing that, then the further you get from here, the easier it is going to be to take the counter trend move. And like I said, when I say easier, I mean the location is going to be more likely to give you distance for a target. So take a look here is where this drops. Okay, it drops right there. That's the low, right? So it's this candle, this bar, I should say this Renko bar, is the one that gets the very low, right? So that's the bar that crossed the line, the very furthest line from the middle. That's that bar that did it, right? And there's a wick on that bar, and what that means is that before that bar happened, before this bar closed, I mean, somebody bought here, right? That's just what that says. This is that it goes up with price and goes down with price. So price went up, it couldn't reach the point to make a bullish Renko brick, and then it went lower and hit the point to make the bearish Renko brick. So somebody had to buy in here to make that happen, to make that wick happen, and that's important to understand, that there is a buyer in here, but that when the bar closed, all of those buyers had basically given up, right? And that there's been less buying volume here cumulatively than basically ever before in this entire area here, right? So so now what we want to do is we want to mark where that happened. Where is that high? What I'm calling a last buyer, right? It was the last guy to buy before we cross that line or touch that line. So now once we've seen that, we're not going to buy it yet, because that's not, you might get a scalp, but not very consistently. If you want the consistent entry, what we need to do now is we need to get price and volume back above that buyer, and we need to develop some distance between them. Okay, so what we're looking for is a bar that not only closes above it like this, that's actually not enough. We need that little yellow dash, which is the point of control. We need that to be above, because that means that most of the volume in the bar occurred above that point. And what is way better is getting the low of the Renko bar above this point, If you have divergence on the indicator, like I explained before, with where you have lower lows on price but higher highs on the indicator, just getting the point of control above it is all you're going to need. If you don't have divergence, like here we have a lower low on the indicator and a lower low on price, getting the point of control above is not enough. We need the entire bar to be above this high. So in other words, this star is not good enough. I'm not saying it's never going to go higher, but we don't have confirmation based on volume that we have overcome that last buyer and that he's not just going to give up at the first opportunity. Now we do. Okay, we've gotten a bar with the low that's above the high where this last buyer was. Okay, so this guy bought, then he gave up, and we closed at the lows. We've now gotten back above him, and they've closed a bar bullish, which means that no one puked their position here, right? It's still not time to buy. This is where the breakout buyer would take that first breakout, and that first breakout usually fails. But here's the cool thing. Because this guy who used to be off sides is now back on sides and he's not giving up, and we know that the volume was more bearish down here than it had been this whole wave, it also means that there are trapped shorts now at this low. Now I can see that because there's a star here, but if you don't have the algo, you don't know that for sure. If you can see it on the footprint too, or maybe you'd watch it on the DOM, but the algo gives me the hint that there's a star there. Getting over the star in and of itself is a great way to filter out some long trades. If you want to wait for a long that'll work, just wait till you get a star that's underneath your that you've gotten above basically first. But what you can do now is you're going to go back here and you're going to mark off that zone of wherever that buyer possibly was, because it could have happened. That buyer could have established his position anywhere in here. That last buyer, he might have bought all the way to the end. I don't know, right? But I know no one bought under that. So what I'm looking for now is a dip back into this area that's defended, right? So now I might not get set up. I don't even remember if this, I don't know. It might just go. But what I would like to see is that I'd like to see it come back and get defended in this area. I guess technically you could probably stretch this just a little bit higher, but I don't know if I'm going to get all the way down. They might not come all the way back down. Yeah, so they didn't quite make it. We got I sort of knew when I saw that star that that's probably good enough. You can see that they came out and then they came back and they tried to get into that zone and they didn't get to us, right? So you'd have to decide at this, once you've gotten this pink bar, pullbacks can be bought as long as you've seen a sign of aggression. I'd prefer my buy to be in here, right? But if you've got a reason to get long just above it, it's probably good enough, okay? And now once it's left, what's interesting is if it comes back here, what usually happens is they let it go the first time and then it can become resistance, but generally you want to reevaluate this every time you get the new peaks and valleys on the indicator. But see how they try to save this old one and it fails, right? They try to defend it and it fails. Now this same old one is going to work as support because of this reaction here. So just to make sure you're following me, like I said, usually the very best setup will be here on the retrace, the very first retrace. That's your high odd setup, is the retrace into this area that happens on the very first time. If you miss it, it's okay. Your choice is wait for the next dip and remeasure and wait for the trade above and then pull back again, right? Or wait till they give up the area like this, right? Now they make a new low, right? But look where they cross here. They haven't done it yet. So look where they cross. They technically crossed this back here, right? So it's basically, you could, if you wanted to be specific, it's basically any of these is our last buyer, right? So you can see that you didn't get a Renko bar with a low above that level, so they go lower, right? So it's still not bullish. See that, how they can't get that Renko bar to get a low above it? Now they got it. See, they got it right here. So now a pullback into that area that gives me an aggressive response is going to be my best case scenario. But sometimes you don't get it, right? Sometimes it just goes. Well, this is where having this old level is helpful, because look what they try to do. They try to defend that area. The shorts try to defend that area. The buyers respond. I'm not going to buy the breakout. That's not my style. But now this reactivates that old level. And when we come back in and we get the test that I was waiting for before at that same level, guess what? That's a buy. And that's going to work really often. Now, this time it didn't work, but usually that will work. But the first test is better than the second one, right? Your highest odds is this one. And like I said, I didn't filter this out first. I wasn't sure if that second one was going to work, but it often does. It just didn't here, right? But let's see if the second one down here works. Oh, we haven't gotten to it yet. Interesting. So let me just back off and find another one, right? Let's just go. I'll show you some more. Let's do one more long, and then we'll do a short. Like I said, it'd be nice to find one that sets up, but they're not all going to work. And some of them just don't set up. But the concept is still good. So okay, the lowest peak is the lowest valley is here, right? Last buyer is clearly right in here. I don't know if this works either. Let's see. Okay, no break, no what's it called? Renko bar above with a low above it, right? There it is. Chart's now bullish. Now we need the high odds entry, which is the pullback that gets defended. Let's see if we get it. We might not. Okay, once again, they take off and they pull back, but they don't get into the zone. You have to decide whether or not you can buy this or not, right? And that's going to depend on the chart and your levels and things like that. But it did identify when the market was turning. It's just a matter of how badly do you want this, and do you have a way to find to buy the pullback? You know, you might find an order flow reason to get that one or not. Let's see if the level reacts on the second time. Usually we fall through it. Oh, they might not get to it. Oh, there we go. So see how they fall through it? This is normal. They fall through it, try to save it and reject it. That's normal, right? Don't buy that. But now if we retake it again, right there, it's gotten over it again. See that the low is higher? A pullback into there should be buyable. Ooh. Right there. That would be your scalp for 10 points. Again, it's the second time, right? It's not going to work every time. But this one gets you that. Maybe just a little bit further if you're real patient, right? Notice the third time does not work because we haven't reactivated it again. It's got to get under it. Again, the first time, you just have to get over it, come back and bounce. Once you've used it, usually you have to get under it and then redo it. Here, now it could get reactivated. Reactivated here. If it pulls back and bounces, you can buy it. Right? Oh, it's so freaking close. That's close enough for me. Right? And then I get this. Like, is it going to be perfect? No. Right? I mean, it's out of the box. Like, we're literally just looking at lines, right? Like, it's not going to be perfect. But that one works pretty good. That one worked all right. You know, it didn't quite make it in there. But, like I said, that all depends on where you drew the line. Right? So, that one we drew based on this. So if we come back here, let me just delete this and see if, so when did it cross down over the line? Oh, it's this one. I didn't put it in the right spot. There we go. See, that's when it crossed the line, right? By here, we're under the line, right? So clearly, that's under the line by the time it closes. This one, it's hard to see, but it actually is too. This one is not. This one is. I didn't see that before. So now let's see how it does. No orthodox close above, or no box without a low touching it, right? This low is inside the range, so that doesn't count. So you don't get this one. This is too conservative of a setup to buy this. But now you know it's bullish. You could buy the breakout, but I'd maybe do it with calls or something, because you basically have to put your stop down here. That's the problem with buying that, is that's a pretty big stop for futures. But if you're trading calls, like that might work, right? So that does not hook up. It should trade through it now on the next test through, right there. Then it's got to get over it. Oh, no, the inverse will also sometimes work. Got under it. Try to test back in. Rejected. You'll get a scalp, right? Okay, so anyway, we get over it with an orthodox close. Not that one. That one. That's the orthodox close above, where you get the low that's above this high. So it's the next dip. Do we get another dip in there? Or is it too late? I'm so damn close I can't see it. Right there. That'd be it. Right there. Ta-da! Right? Kind of cool. I think it's pretty neat. So, okay, let me find another one on the other side, right? Erase all the lines. Okay, let's go to a different day. And we'll look at a short one. And then I'm going to show you what to do when it's not balanced. Or when you, what I should say, I'll show you what to do when you know the direction. Okay, this is like, I don't even know, Monday. Okay, so we need it again. It's easier to see this if you do it here. We'll do it over. If it gets over the yellow one, it'll work better. The pink will work too, but the yellow will be best. So, okay. Hold on real quick. All right. 30 seconds. Hold on. I just got to respond to this text. Okay. So where did it cross the line? Right there. I'd say. Here, we'll double check this. Not cross the yellow line, cross the other line. That's the highest point of this volume oscillator for like this whole balance period, right? So the bottom, now we're looking at the low. So this is our last seller before like true capitulation potentially starting. Okay, so getting under him, which happens here, right? The high of this bar is lower than this. So we are clearly under the last, did I say this? Did I do this wrong? Yeah, the last seller, right? They were going straight up. They had the one last seller, then he gave up, and now we've gotten underneath that last seller. He's no longer off sides. Okay, now a retrace into that area. If we get the rejection, we can mark off this whole zone here. A rejection out of that should give us a short more often than not. Here, I don't want to see all this extra stuff. Okay, now this is close, right? If you have the algo, this is the exact same things I was showing you before. Once you've gotten this, what we call an orthodox close, any aggressive signal can be shorted. Like, so technically, if you knew it was bearish, you could take that signal. It's a sell, right? Additionally, there is divergence. It's hidden divergence, but there's a higher high on the oscillator and a lower high on price, which means you can be a little bit more aggressive. So in this case, I would definitely take this, even though it didn't come all the way up. Is it possible that it crossed back down under the line at a different time? Let me see. No, that's that. I did it right. Let's see if it makes another pullback. I don't know if it will. Does it give us another chance up there? Like right there. That'd be it. See how it got into there and then rejected? See, now the hard part is like, well, how do you know not to take this one? It's like, yeah, that's tricky, right? You need to there's some nuance to it. You need to identify that we've already gotten we've already done the move, right? We've already gotten way below here. And so now there's potentially shorts that could get trapped. By the time you get all the way back up, there's been a long trade already, right? So you don't really want to aggressively short there. But if it comes back up into the zone, it could reject right away. Otherwise, it gets all the way through, and then you wait for the test below and then reject again. So let's see if this works right away. It does. So they come back in, they can't get through the zone, it rejects, and you get a scalp. And let's just, I'm just curious if it comes back to it ever. For a third time. I don't think it does. No, we picked one that's too high. Oh. Right there. Let's see. Does it still act as resistance? Yep. So when they're on the edges of price, it's not a bad idea to leave them on your chart for a bit until they stop working, because that's another really good location. And if you have the algo and you knew to watch for pink bar, orange bar, that'd be one I wouldn't want to skip, because it's right in the right location. Then after this is clearly bearish, when you get this pullback and then another star down, and this is another pattern, right? Pink bar star. I'm not going to skip that one either, right? Because I'm rejecting out of resistance. Now, could I go through the whole process again? Yes, right? I could go through the whole process again and say, okay, well, when did I get up there? Well, I got up there right here. And so I'm definitely bearish if I can get under that. But look how far that capitulation went, right? You're not going to get triggered on that ever. It's just too deep, right? So the other thing you can do is see how it went down and then it makes another. This is the divergent high, right? Lower high on the indicator. Higher high in price. Remember what I said, if it's divergent, you can get a little bit more aggressive, right? So now, even if it wouldn't have gotten to the yellow one and only the pink one, if it's divergent, go ahead and use, when did it cross? Right there. Let me use the other one without the numbers. That's the level you need to get a Renko bar below with and now remember, it's divergent. So now all we need is that bar, that dash. We need the dash below it on a bearish bar. So if you look real close, that dash is where all the volume is. We didn't quite get it underneath here, but we did here. See how the dash is underneath it and it's a bearish bar? So that's all we need. Now any pullback into this zone, we can sell. I don't know if we get it. Right there. Perfect. And see, having the algo might help significantly with your confidence. Because for me, seeing the star when I know that those stars are like very often good signals if they're in the right location, the location's perfect, right? So I mean, it's going to work a lot even without the star. But when I got the star, like I'm good, right? Look at that. And so keep in mind, like I said, you're getting in here. You don't have the confirmation until 78, but your stop goes 1 point above this. So 95, let's say. Right? So that's like what, 17 is that? Right? So it's a bigger stop, but you're going again from, what did I say, 78 to like 30, right? I mean, that's almost 50 points. Like, that's a good day for most people, right? with $20 a contract times even 40, right? Even if you didn't hold it, right? I mean, that's an $800 contract rate. Like, if you trade 2 contracts, you just made $1,600 in 12:45 a minute, right? At freaking lunchtime. Like, I don't know. Like, and then people like are like, why does the room cost $95 a month? It's like, dude, come on now. Like, give me a break. So yeah, that's a good example of one. So let's just, okay, so look, they reject out of it again. It's still valid. It's just not going to be as good because it hasn't reactivated. So you still get another 15 points. Now they trade through it, so now I need to reactivate it again. I don't know if they do. It needs to get under it again. I don't think they do. I think they leave that one. Okay, so let's find one more short because I know it's a little complicated. If people have questions, like if I'm not making sense, tell me. Okay, so I'm just trying to find one that looks a little bit different. Here is a good example of divergence, right? So if you don't have the algo and you don't have the experience to feel confident with finding the levels and stuff like that, and you're just like looking for like a aggressive way to trade, is this a horrible place to sell? It's one of the better ones, honestly. It's just not gonna always. It's not gonna. Okay, nothing always works, but you're gonna have to be ready for the times where they stop you out and then you get right back in again. Because it got that, that now you've gotten that yeah, like that's just how it works. Like you might get fucked first, but then most likely the next one's gonna work, right? Like you're usually gonna have you'll get it if you just stick with it, but it might not be like precise. But when you do it this way, okay, so this one is way back here, right? This one doesn't, the yellow bar is way back, or yellow line is way back here. That's not going to trigger. I wouldn't know that at the time, but let's not even worry about drawing it because it's not going to trigger. Notice this one only gets the pink, right? So it's not as good, but it's like, we're going to use it anyway. I'm going to show you how this works. And then this one crossed the pink, see that? Right, so where did it cross the pink? The second time. Where's the most recent time it crossed the pink? Right there. Yeah. It's not crossed it yet. It's higher now. So we're going to say it's crossed the pink there. I'm talking about this pink line down here. It's gotten back above the pink, or at least touching the pink. Again, those are somewhat arbitrary. So realize these aren't like that. I'm just using it as like a reference, right? But the distance between these two, that's kind of it's close enough for hand grenades, right? It's one of these. So here you've gotten the close below with the high that's lower than this low. So now it's at what we call activated. So now if we get back in there and we get a rejection, it's good to go. So let's mark it off. The way I do it is I now color it in, because now it's a zone. Initially, if it does not make this low, oh, I forgot to tell you something. If this is purple, right, and the very next bar is a star or a green bar, and it like this, you get this pattern right here, and it's really bullish, you might want to wait. Because sometimes when it's particularly bullish, but bearish sometimes too, if they're defending that low with like immediately, it might not be ready. Like it'll still work, but it's not probably not. See that? Like that is a sign. The purple bar, immediately followed by the green bar with a big bullish trend. We know these push often, right? So if this just breaks right through it, you just gotta back off. You just gotta wait. So I don't remember if it does. It does, great. So it doesn't. So it's all good. You can short this. The problem is so you could buy this. I'm not saying that's wrong. I probably wouldn't. It's super aggressive. But what I was not sure, sometimes what happens is you get purple bar, green bar, and then they flip right through this. and you don't fight that, right? You need the sign of aggression to reject the area. It's okay if you get a pink bar up here, but if you do get a pink bar up there, it's just a scalp on the way down. You don't hold runners. If the entire trade setup, the combo, whatever it is that you're trading, the 2-bar combo or whatever, the pattern is that you're looking for, if that whole thing is inside the zone, or at least not above the zone, you can hold it for runners. So let's see, does this work right away or does it get stopped out first? Wow, it's really freaking close. So I'd have it 1 point behind this. So this is 1825, so I'd have it 1925. I probably would have gotten hit by 1 tick, but I would have gotten some profit off, I believe. Did it get to 10 points? 0550, 93. Yeah, I would have gotten 10 points, but my runner would have stopped there by a point. Oh, by more. So this is the problem with fighting like heavy, what's it called? Heavy aggression. And now look, we made another high here, right? So really the right way to do this is to start again and to say right here, I think we crossed it. So technically we should probably be moving this here and this here. But here's a good example where we get the pink bar at the top. So that can be a scalp. It's at the top of the level. And if you think it's bearish, you can short it, especially if it looked like this. That's a perfect example where it's like they're rejecting above. Not usually a swing trade, but it's a decent scalp. Just like this is technically a scalp up. It's an aggressive scalp, but it's a scalp. So I would take this. Now that's a signal to short. It's rejecting out of the zone. And like I said, this zone actually got moved. So that should be a swing. That is too. See that? That's a swing. Yeah. Yeah. So as long as you are happy making 1900 to, like, even if you didn't get it all the way down there, let's say, like, what's a reasonable spot to let go? 75, right? I mean, if 25 points of NQ like gives you a good day, you do just fine. and like I said, this is just one example of a new filter that I've found recently. Look at this. So like I said, with the algo, it's a lot easier because you get these over and over and over again out of the same freaking zone. So look, now it's broken through it. Now we can't use it again until it's reactivated. We got to get under it. I don't know if it does. I don't think it does. Let's see if it does. Just curious. I don't know how long these last. I haven't done an extensive research on how long they last. But it would make sense that the ones that would last would be the ones that were furthest away. And so there's probably another one up there. And I just can't reach this one because there's one in the way. If I had to guess, that's probably the low. Yeah. I don't think we get there. Like I said, I'm definitely going to have to look into that some more. I'm just using it on that first. I don't think it does. On that first test. Where the hell is price? Okay, yeah, we're not down there yet. So, all right. Any questions on that setup at all? Any questions on anything? Is anybody still here? If I haven't lost you all, I'd be happy to answer some questions. So let's see. If you don't have any questions. Oh, you do have a question. Oh, you're just saying yes, you're still here. Okay. Cool. Yeah. Does that make sense? Do you want me to show you some more examples? Go to a different day? You want me to show you how it works on ES? I mean, or should I just move on to something new? Like because like I said, it's just one tool in the toolbox. It's just one idea. Um, there's so many, but it's one cool way to figure out where you want to be trading. Um, and yeah, it can help filter out some spots where you're like, I don't know if I should really be getting long here. Like if you had that zone marked off, you'd know where you want to get long. Like I guess one thing that might be helpful is taking a look at how I would look at the current situation. I don't know. Let's do ES. Let's do it in ES instead. I don't know if we should do 8 or 6. I guess we'll do 6. It's smaller, so there'll be more information. We'll have. Oh, I gotta add the oscillator. That's right. I'll hold. Let's see. So to do that, oh yeah, I can just do this. So I saved it as. Where is it? Oh, right here. There we go. Okay, let's try it on ES. So it should be relatively similar. It might be a little bit easier on ES. Often things are a little bit clearer. So it's kind of unfair to do it backwards because like you wouldn't know where the latest ones were earlier on. So the smartest way if you're back testing or trying to understand something, the best thing to do is to like pick a spot to start and then work left to right. It can get really confusing about like whether or not you knew information or not if you go the other direction. So let's see how it handles this because this is where a lot of people struggle. If you're a long only trader and you're not sure what to do with this and you repeatedly. Now, to be fair, this is econ, right? So this entire thing happened in like 10 minutes. So like it's honestly not a great example of like a time where people would take a bunch of stops. But I think you know what I mean, that this price action where like it keeps trying to get saved and then it comes back and then it keeps going. It causes people trouble. For instance, like if one of the classic trade and perform room setups that we use is something called a trap back in. So if you get one of these little these little triangles, which we call apexes, and then you draw the line wherever that low was, and then you wait for another bar to go underneath it and then close above it, that bar is usually a pretty good guess of where that apex is going to form because the apex algos are the one signal that don't show up immediately. They show up 2 bars later, but they never reprint. Once they're there, they never go away. But it just takes some future information to put them there. But that's fine because we just use them for location. They identify where all the apexes are of the rotations. It's like the primary spot where all the stops are sitting behind. So when we get this apex formed, which happens here, we're like, okay, everybody who got long here, put their stop behind this. So if those stops get sucked up and then they defend the zone, there's a pretty good chance that I can get 15 points here. Well, this time it gives you like 80. And that happens sometimes. You just stumble into huge trades, even though there's nothing more than just a simple setup. That happens not every day, but almost every day. If you just take them all, you'll catch it. You'll find this one. But some of them are going to stop. They're not all going to work. Like here, if you kept going with that same plan with no other filter, there's an apex. You'd go under the apex. You come back with an aggressive signal, the green bar. You get long here. Now this one does get you your profit target. Because you get in at, let's say, 91 if you're a little late. And best case, you get 94.50. So that's more than two or 3 points. So all of us are taking profits by 3 points on ES. Now, your runners would stop if you thought this was still bullish. Oh boy, hold on. Let me kick this guy. Hold on. Okay. Yeah, even if you're, what I'm trying to show you is, even if you don't know anything about reading price action and you can't tell that this might be the right side of the move and maybe it's not a very good time to get long, you can still get 4.5 points here. 3.5, I think it was. Right? So it's not wrong to just take them all. But there is a point of like, what is it called? Diminishing returns, where this one is likely to get you 2 to 3 points, but when it keeps breaking down, the likelihood if you get another one, it decreases. So like if this one traps back in after that big impulse move down, it doesn't. So it doesn't set up. Nothing to do. If this one traps back in after that big impulse down, right there, this one is going to have a lower likelihood of working. I'm going to get proven wrong. 62.25, 66.25. That's still enough. That one worked. I swear some of these stop. Okay, this one. This one's actually okay because you had multiple apexes here. I would have actually taken that. That obviously works. Oh, and then it's done. Okay, so maybe that wasn't a good example of showing you where they stop, but they do sometimes stop, right? You don't always. It's not 100%. It's way up there, but it's not 100. What I want to show you is, let's imagine that was an area that like you got nervous, that you identified this wasn't bullish, and you weren't sure if you were going to get 2 or 3 points. If you wanted to filter out your trades and make sure that it's bullish, and especially if you're like primarily interested in the trades that give you 25 points or not on ES. If you want, like, if you're primarily targeting like the 5 to 10 point trade, and like even though you could take the 2 to 3 point trades, you'd almost prefer just not taking them because the stops bother you, right? If that's your style, then like you need a filter, right? And so you're going to miss a ton of trades that would have gotten you 3 points, but you're going to get most of the ones that give you 5 or 10 or more. So here you can see we got into it. We got through this yellow or whatever color that is, brown, and then we touched the blue. I can't tell my colors. I'm seeing all these other things. We touched the red line on this bar here, right? So we technically need to find the last buyer before that happened. It's hard to say exactly where that is, but let's just grab it here for just a guesstimate, right? I'm not totally sure what the rule is in that kind of situation where it taps it and it never actually goes under it. It shouldn't be all that different. So what you would need to happen, remember, since we're working at the bottom, to get long, you need to get a buyer with a bar above that. With the low of the bar needs to be above that. And you can see that does not happen. And so you miss this trade, right? But that's by design because it doesn't go for 5 points, right? If you like I said, this is a filtering technique for someone who doesn't want to be as aggressive, but they also want to avoid some of the stops. So you miss the 4 point trade by design, right? Okay, so now we wait. Now notice this one was divergent, right? So all you would have needed would be a point of control on a bullish bar to get up here, and it's still close, or a bar with a low higher than this high. Is there divergence? Because that's a bearish bar. It doesn't count. Even if there was divergence, wouldn't matter. We can't get the bar above it, right? The only prices that went above it closed bearish, and then this one it closed slightly bullish, but the point of control was clearly underneath it, and the low is clearly underneath this high. So not activated, nothing to do with this other than sell it. There are some trades, by the way, of rejection out of these when they fail. By the way, that is the thing. It's advanced, and I'm not going to go into it because there are ways to find those. Okay, so we make divergent lows. See that? Okay, so and we recross the levels, right? So the last time we crossed the levels, the red level was right there. So we're just going to slide this down to wherever that low is. And we're going to say, okay, if you don't want to take the trap off this is a divergent low here. So if we can get a POC above this on a bullish bar, you can start looking for swings.
Nope. See how they can't get a POC above this on a bullish bar? We're not, as far as we know, there's no reason to think there's a low yet, right? We're not fighting this trend. Okay, is there a way to get short? Yeah, there is, but like let's not worry about it. Let's not worry about it because it's going to get confusing. Okay, we touched again here, so we get down under it here. Okay, there's our last. Whoops, last buyer before the low. Which one is it? Is it the second or the third from the end? It's this one. He's the one who crossed the line. Okay, is it divergent? These are making lower lows. Is it a higher low? Yeah, it's divergent from this one. Good enough for me. So all I need is POC above, right there, on a bullish bar. It's activated. Now, any pullback into that area that then rejects lower and gives me an aggressive signal to go back up, I can buy. It needs to pull back. Right there, I guess, is where that's all it's gonna give us. Doesn't quite reach it. Right? But close enough for hand grenades. You know, if you didn't take this one, and then you see like you'd basically have to take the breakout here because I didn't get any signal here. The pink bars aren't signs of aggression, and I'm not usually buying them. I might have bought the green bar, and then if that got stopped out, immediately get back in. But you know, if anything, I'm just missing it, but I'm not losing any money throughout all this. And then it's just a question of where was this last buyer. The only way this could get improved, perhaps, is if there's a way. Where would this have to get to? This point of control, at least. So is there any reason to think that this level was important? It's where it crosses the yellow line. Yep. Interesting. But that doesn't work all the time though. But that is interesting. I mean, it did provide a orthodox close above and a test back in. Maybe that is good enough. In this divergent situation. That's interesting. I actually hadn't thought of that. I know the yellow works when you don't reach the red. So maybe that does work. Here, let me show here this one and this one are examples where it doesn't even reach the red. You can still use the yellow. You're just probably not going to get triggered. So it starts to sell off here. So really anything lower than that is like just pure selling. So we need a close up here. So this one has the POC right on the line. I'm not thrilled about that. I'm pretty sure it needs to be above it. Oh wait, it is above it. Is it divergent? No, not a divergent. So it doesn't count. It's the low is lower than this low, and this low is lower than this one. So you need a whole bar above it. Yeah, so there's nothing to do there. Nothing to do there. This is the first time it triggers. Oh, but we got a new one, right? So let's adjust it. Right here. So we can move it down to here. So now all we have to beat is these guys. Right there. Now, any pullback into the area and with an aggressive reaction, right there, that's probably what I would buy. Oof. I would have had to try it twice. This one's still good. Yeah. And I don't have a great way to, well, I do actually. This is the if you look, that's the trap back in. You can't skip this. Once you've gotten that activated, this trade is going to work a ton. Test underneath, run. If you've activated this system, that you have to take that. I probably would have bought this one. I don't have a great way to avoid that stop, right? But yeah. I guess the only way to avoid it is to put your stop underneath this. but then you probably get hit here. So I don't think that's worth it. I think you just put your stop here. You be a man and take the trade, take the loss, and then re-enter. Hate to say it like that, but that's probably the solution. Because like I said, nothing is going to be perfect. Um, but yeah, I think that's probably close enough. Let's see. Is there one where we don't get? Okay, so here these don't even get to the purple line, right? They just make little peaks. So what's going on there? So this one's a peak. Let's find the highest one. Okay, we get underneath. Oh, it's divergent. So technically this is good enough, but we're clearly under it here. So pullback into that zone should be sold if it has aggression. It didn't make it. It just rejected. The cells don't always do it. We might have done that one already. That looks awfully familiar. Do we come back out? I think we did it on NQ. It's very similar. Okay, we're not reaching it. There we go. That one's got a star on it. It's just hard to see. That's your cell with the star associated with it. It's just not lined up. I haven't fixed that in my... And see, this one you get the scalp. Actually, that's a pretty good trade. It's ES. This is 86 to 78. That's a good trade. That's more than enough. It just triggers again. It triggers again here. Yeah. Wow. Okay. So that's going on now. And then let's see down here. See that this is where it's less likely to activate. And this is why this filter works so nicely. Since it's been underneath this red level and I don't have any additional levels under here, you can't mark anything since back here. So I'm not bullish until this guy gets cleaned out. I would have to see a buyer above that. And you can see that if we're rejecting out of it, it's probably bearish. Okay. So if you have an order flow way of finding a short, yeah, it makes sense. Now, if you want to see what that looks like, let me show you on mine. So this is the trade and perform algo, except we added the volume zone oscillator. But without that, other than that, it's the same thing. You can use the MACD histogram, and if you see, they do they're similar, but you won't have the perfect lines. But if you just want to find the spots where it peaks and valleys, you'll get the right idea, right? You're still going to get the same concept. But the volume zone oscillator works better because it's influenced primarily by volume. And like I said in the introduction to this coaching class, I want to show you that, the indicators like MACD are lagging because they're based on information that's only produced after a close. Like it's based on like moving averages, right? And the moving average can only be, it's just looking at the close of the bar or the candle or whatever. It's not looking at actual order flow. It doesn't make it useless, but it's not going to be as responsive, and so it's going to be a lot harder to be, if you're looking for levels based on something like where the MACD was lowest or whatever. It's not going to be as responsive as using volume. And with the volume zone oscillator, it's honestly because it's such a simple concept. Like it's basically just like it's similar to cumulative delta, but done in a way that's a little bit visually easier for me to understand. And so in futures in particular, they tend to mean revert a lot. And if you have a lot of selling, and especially if that selling just starts to not really beget more selling, see how like this just flat lines down here? The likelihood that you're going to mean revert after periods like this increase. So whereas like with a MACD, you'd have to find divergence on the MACD. See how like this?
Oh, we can't even see it because we can't. I would not be surprised. Yeah, see how this is divergent, right? That you if you can see that, that'll help because you'll also know. Okay, don't buy this. Wait till I got that divergence, and now look for longs on pullbacks, right? So that's just if you're gonna use something like a MACD or an RSI or whatever, don't focus on overbought, oversold, or the location of it, the value. You need to use it. The only way that's useful is with divergence, really, because by the time you've got like the new low or the new high or whatever, it's a lagging indicator. You're not going to have the information. You're not going to be able to respond like you can with something that's so responsive to little changes in volume, not just price. Okay, so if there's no questions about this setup, I will show you another one. Like I said, this one is primarily a filter. It is used to make you more conservative and to be more precise with whether or not you should take a trade, maybe with bigger size, or whether or not you should trade something at all, or whether or not you should be bullish above or below a certain situation or bearish above or below a certain location. The other trades, like I said, this is the trade and perform algo. I took this and I added some other signals. Let me erase all this. I added some other signals and changed some colors. And so mine has more stuff on it, but it's the same chart. Like this is still, here, let me find the 6 tick. The 6 tick of ES is still the exact same chart. It's just that the colors are different and there's more on it, right? Like I've got the delta over here, delta by price, and then I've got these diamonds and I've got these arrows, and I've got like the extra lines and stuff. So like you don't need all that, right? Like you really don't. But I've added them slowly and actually taken away quite a bit. And the ones that I could technically, the lines here, I technically don't use very much. They've been programmed into the actual signals. So I technically wouldn't need those, but they do tend to act as support and resistance. So I'm leaving them on there for now. They also help me identify like points where momentum changes, but I ignore them most of the time. The little lines, the pink and the orange and the green. But one thing I really do prefer with mine versus Simon's, even though Simon's is a lot easier to read, I've connected all the points of control with a yellow line, which at first is quite distracting, but eventually you realize that like it gives you really good raw information about whether or not the bulls or the bears are having more success pushing volume in addition to price. And it has helped me build some new signals that Simon hasn't adopted yet. I'm always willing to share my ideas with other people on my team. So, it's not like this is some like secret sauce special thing, but here, let me put the where is this? Okay. So yeah, there's nothing like secretive or anything about it, but it is proprietary, but it's not something that I wouldn't share with my team members. So if you're in the trade and perform room and you have the algo on your desktop already, I can share the symbols with you. But if you don't have this, it's not going to work because this actually uses the same studies and stuff that are found on Simon's, but if you don't have his DLL file, you won't be able to access them. So it won't work unless you've got the algo already. But if there's, if you do, you're already in the room and you want to add even like one of these, you can. So we're going to look at hopefully 2 quick setups, and then I got to get some rest. And these are a little bit more straightforward. And they're used primarily for momentum, but both of them are related to volume. And we're going to find them, we can find them on ES or NQ. So the first one is very simple. What we're looking for is one of these yellow stars at support or one of these white stars at resistance.
and you can either see that ladder like horizontally, like maybe there's resistance from the left, or by looking at these shaded channels. There's like a white and an orange. Underneath this, that's primarily support, and above it is generally resistance. So that's another. When I say support and resistance, you can think about it either way. You can think about it like horizontally, or else with the channels. Mine is just shaded in, and Simon's is just lines. I just shade in the inside, and I tightened them up a little bit. But it's the same concept. So you need that, what I call a out of position star, because what we're looking for here is a trapped trader. So these stars are a sign of aggression. It means someone pushed really hard into this low. And then the white is a sign of aggression to the upside, so someone pushed really hard into this high. Now, it's not always bearish to push into the high, right? If you've got momentum behind you, it can be the start of a breakout. But when you have a big breakout, and then you put a big aggressive player down there, and they immediately get beat, you can, if momentum's on your side, you can get some really good high odds scalps, and the signals that are on this next bar, you can use the ones that Simon already has, like the green bars and the stars, but I've added the diamonds, and then there's also these little boxes. It's blue and yellow, so these are the yellow ones, right? And then the blue ones are bullish, and they look like that. So when you have, like I said, a star that's in the wrong place, either at the low when it's yellow, or at the highs when it's white, and then either the very next bar or else a bar that shares the range, but like came after a period of sideways, if it's going in the other direction with the opposite signal, that is as long as you're confident that the direction is right, it's a really good entry. So this one, for instance, star down followed by diamond, this one worked great, but it only worked because there was divergence on the MACD. Mine looks like a line, but it's the same thing as Simon's. It's just presented differently. It's easier for me to see with the line. Otherwise, I get confused between these two. So there was divergence on MACD, which gave you a hint that it might be bullish. But if it wasn't for that, you wouldn't really know to be looking for that one. So you could have missed that if you didn't want to be aggressive. But what you'll find is in bullish situations where you already knew it's bullish, getting those stars followed by aggressive signals is a really consistent way to make money. So there's another one. So see how we already came down. Like, I might not have been confident enough to take this one, although it works. Yeah, the arrows also will work. But the star gets stuck at the bottom. So this one sets up 3 times. Star at the bottom, aggressive signal up, star at the bottom, aggressive signal up. But the last one, if you see, had that little blue square. It's hard to see it because I've got the arrow on there too. There are multiple, there's 3 different algo signals triggering on this bar, and it's outlined in green. So like, it just had many reasons to pay attention to it, all basically saying the same thing, that there is aggression in this bar and they're working to the upside. And like I said, because we had all these trapped aggressive sellers down here, you'd know that it's probably time to start being bullish. But even if the trend has been going on for some time, they work then too. So here's another one. So you've got stars getting stuck at the lows, right? Or at near the support. And then you've got aggressive signals parallel to it. See that? All those aggressive signals produce rotations up. And even this one is still parallel. If here, think about this horizontally. Once you've gotten that trapped star, once you get above them, any of these blue ones are going to work a lot. You can see when it's bearish, once you've like turned around and it's bearish, and the yellow stars and the yellow aggressive moves, like the yellow boxes and stuff like that, once those start to work and get extensions, you know you haven't trapped these stars. So you're underneath them now. So now these diamonds are not going to work very well. See? But the opposite will. If you can get... Now this one isn't really at resistance, but if this star would have showed up here, or even having this arrow here, which is a bullish signal, and then it's immediately followed by this aggressive yellow box, gets you a scalp lower, right? Let me find another one. So here's an interesting way to look at it. So let's start over here. I'll show you. This is I just want to show you the sequence and how this can help with analysis. Okay, so it was bullish over here. Okay, white stars were giving you extensions. All of the bearish signals were immediately getting beat, or else at least not giving you much of a rotation, whereas all the bullish ones were giving you rotations that worked, right? So if you didn't know it was bullish or bearish, some point in here you figured out you probably shouldn't be shorting. Then they give you that all changes here, and we talked about how you might find out where that is, right? But all of a sudden these bearish setups start to work. Pink bar star, pink bar arrow, both of those are good setups, and you get an extension. Then you get a continuation sign, the diamond, and that works. And then you get a yellow star, and that works, right? So like, should you be buying now? No, right? Like all the bearish trades are working. So if I get a buyer at resistance and then an immediate rejection of that, I can actually short it. So here, these are not at resistance, and they didn't have any aggression to follow it. So I wouldn't have shorted this one. But what we can do is we can mark them off, and we can say, look, these guys were if this becomes resistance, these guys will get trapped. So it's now become resistance. And so these start to work to the downside. See that? Because we've trapped, it's primarily the higher one. This guy got trapped. We got below him. See that? And so when we came back into his zone, the aggressive trade started to work again. Now, lo and behold, if you look at this closely, what you'll find is if you do the same trick with the volume and all, the volume, right? You'll a lot of this will line up. So if you what I said before about like we know where to get the long, right? The long would come if you broke above this, right there. If you broke above that, you know to get long, right? Well, the way to get short is to trap longs in there. So get aggressive longs to commit themselves too early, then get that what we call orthodox close below, where you get a bar that closes with the high below the low of that dip. And what you'll find is that the aggressive moves to the sell side will start to roll down. And see, if you're looking at this the opposite way, you're looking for the long and you're going to try to buy this and you're going to get like 5 points and then it's going to fail, and maybe you take this one and take a loss and buy this one and take a loss, and you're like, damn, I thought that was the bottom, right? But if you knew instead that, hey, this isn't bullish unless I get over this, and if I get over this, a lot of the times they're going to come back in and test it anyway, so let's not even try to pick the bottom. Let's just see if we can trap a long. And here's the longs. Well, they're not trapped yet. Now they're trapped. As long as we don't break back over this. So now you can almost move this back over here. You can say as long as that holds, as long as that high holds, if I get aggressive signals down here, these guys are off sides, and they were really aggressively buying this. So chances are they're going to puke. So where should I target? Well, probably down here. So I get that. And then what do? They take profits. Is it time to buy yet? No. Why not? Because I haven't gotten above this guy, right? So there's nothing to do. Now we make a new low on the volume oscillator. So now we can start restarting where that is. We can say, okay, well, now I guess if I get above this, I can start looking for longs. So there's the low. Are you going to catch the low? No. But you're also not going to have any trouble with that. So that's a buyer. That's aggressive, right? The diamond is an aggressive buyer. Once he gets trapped, oh, they didn't come back in. If they would have came back in, that's a sell. They just couldn't do it. Okay, they retest back in there here. Right here. That guy's got to get beat if we want to be bullish. Oh, we already had it marked off. Okay, got to get over him. Can't do it. So look what happened. Aggressive buyer, trapped. Oh, we made a new low. See, there's no rejection here, but there's no short. But if you were watching here, we made a new low. So we started over again. You could technically keep the other one too, but it's right here. All you gotta do is get over that guy, which happens right here. And now any pullback can basically be bought. Now look, this one doesn't touch down here, but guess what it does touch? It touches that old one, right? Which was here. It's still valid. Just got to get above it first. Oh, I guess actually this didn't get above it till here. Does it pull back? Right there. That's your buy. Like, it feels late, right? But it works. Yeah. So they kind of work together, right? So that's another idea. Now, like I said, those signals are related to volume, right? And so when you get aggressive volume changes, you can get a lot of information about whether or not that level is important or not to the auction. But another important volume related signal are the diamonds that are inside the bars, right? And there's the yellow and then the red, not the purple and pink ones. That's also volume related, but something different I'm not going to talk about today. But the red ones look like this. They're on the inside. And these have a really interesting setup that I just discovered on accident. So how these work is they indicate to me that this bar filled super fast, even though the bar before it had a ton of volume, which shouldn't really happen most of the time. Usually the way that works is if it's bearish, when you get the diamond, it's a sign of aggression and you can get short, like I was showing you before. But there's a really interesting thing that happens when you have when the signal shows up pointing in the opposite direction of the trend. So here you're trending bullish, right? And the diamond shows up bearish, right? So what that's telling me is that this guy is a big, strong buyer, and the very next bar, sellers sold through that range really fast, right? That's not usually how a trend ends. It's very rare for a trend to end like that. Usually a trend ends by pushing aggressively up to the high and then trapping them underneath and then making like a lower high, right? This is not usually the high. It doesn't usually look like this. It's got to get some aggression first, or some kind of trap has to happen first. You can see this is the guy who could get trapped. This is the most recent aggressive trader, the star and the diamond here. But if you look, we didn't really trap him yet. See that? We haven't gotten under him yet. Trapping him would involve making him offside. So trading down here When we did trade under him, the buyers responded aggressively. They shifted volume back up. That's what the green bar says. And they went up, and then they added volume here. They quickly tried to break him down, and then we get a purple bar. Now, the purple bars are a sign that buyers are pulling their orders, and that's why price is moving. It's not an aggressive, it's like the opposite of aggression. Price isn't moving because someone new in the market is pushing. Price is moving because the people who used to be in the market are leaving, right? It's not bullish, but it's also not aggressively bearish. What is bullish is when the very next bar, after all the bulls gave up, if the very next bar shows signs of aggression, that is bullish. And this has two signs of aggression. It's got the blue square and it's green. So two signs of aggression to the upside that came at just after a bar where every buyer was giving up. Right? Very similar to this. Every buyer giving up. Super aggressive buyers come in to try to save the level. They trade underneath them. Super aggressive buyers come back to save the level. Buyers trade heavily here. They swiftly break him down. Buyers start to give up. If it was bearish, guess what happens? You break down. When you don't break down and instead the buyers take this back, that is a great entry for a scalp. It's not going to be a swing trade all the time, but you're going to get a scalp here a lot. And so what the pattern looks like, you don't even have to understand all that, right? All you need to know is that if it's bullish and you get red diamond followed by purple like color bar, followed by a bar with aggression, like any of the, like the star or the blue or the green, anything aggressive to the upside, that's a buy. And then but it's got to be bullish. It's only going to work if it's bullish. The opposite will also be true. Once it's bearish and you're taking out lows, now if you have a white diamond followed by a pink bar, which is the opposite of the purple, and then followed by an aggressive sell, like an orange bar or a star down or an arrow, that's the sell now. So you're buying here for a scalp, selling here for a scalp. Is it going to give you huge swing trades? No. Is it going to give you 3 to 5 points on NQ a lot? Yeah. I mean on ES a lot? Yeah. And 10 to 15 on NQ. They don't always set up. You can see here that did not bounce, right? Okay. Red diamond, pink bar, no aggression. Nothing to do yet. But if there's an aggressive buyer in this range in the future, it's buyable. There he is. Right there. Aggressive to the upside, bullish. Trapped this guy. It's done. See that? Right? Same thing. Red bar, red diamond. This is a pink bar, right? That zone now has a trapped seller, potentially, if we can get over him. We get over him. Whoops. We get over him. We erase the lines. We get over this guy, right? Whoops. We get over him. Now this whole zone is buyable with any aggression right there. Buy it. And so you can actually trade momentum this way. Are you going to get 20 points every time? No. Is it sometimes only going to give you 3 points? Yeah. Sometimes it'll only give you 3 points, especially if you've got resistance right above you. But will it work more often than it won't? Yes. So that's just going in the same direction. It also works on NQ. Let me find one on NQ. Let's see. No. It's got to have a pink or a purple after the diamond. Diamonds in the bar only. Wrong direction. It doesn't show up a ton. Right there. Red, purple, green, buy. Like I said, is it gonna give you 100 trades a day? No. But can it add? Can it pay for the room? Yeah. It can pay for the room. Bearish, white, pink, sell. You have to know the direction. It's an advanced trade. It looks easy in retrospect. It's a little trickier in real life. But if you can read price action, or if you've got supplemental things like I do to help you with that, see here you got it's bearish, so you're not looking for the buy, right? Don't buy, even if this is green. Do not buy it because it's bearish. You'd only be interested in the bear trade. It needs a white diamond there that gets stuffed. It does not happen. See here too. You don't mess with that. It's bearish. I've probably missed a few. I'm not looking carefully. This one's close, but there's no aggressive signal. So, oh, well, it needs a pink bar after it. Never mind. No. Okay, so this is bullish. Right? Now, technically you'd want this to be saved. But the good news is if you reclaim this, it's all good. You can buy that. Or that. Totally cool. Right? The level got taken and then reclaimed. So it's okay. But it needs to, here. Bullish. Right? So red diamond. The next bar is pink. That's normally not what you want. But the bar right after it's purple. And it's in the same range. See that? So this counts. Okay? This is not bullish. Right? You don't buy that. But this one is. If you weren't sure if it's ready, wait till he's trapped. Right here. You can wait till he's trapped, which happens here by getting this point of control above his high. Now the next buy is a swing. Ha! Cool, right? I don't know. I think it's pretty neat. Okay, let me find one more and I should get some rest. Hi, cat. Okay, Barrett. No, wrong way. No, this is right. Bearish. Right? So, it's bearish. We have a bullish sign followed by a purple. Oh, no, it needs a pink bar. It needs a pink bar. Is there a pink bar here? No. Not above it. Nope, nothing. Wrong direction. Wrong direction. Right? I think I'm right about that. Wait. Is this bearish? This could work. Okay, so these two aren't next to each other. It's not good enough for me with one in the middle. Plus it's not super bullish. But if you thought this was bearish, or if you want to know when it's bearish, you got white followed by pink, which is potentially vulnerable. So all you have to do is get back under them, right? So get point of control underneath this, which happens right there. Well, now it's bearish, right? And you get the retest on the wick, and then you can sell that. See? They don't always work. I'm not trying to miss the stops. I'm not trying to skip the stops. I just haven't found one yet, I don't think. Okay, so is this bearish or bullish? That's the first question. So this is an interesting one. So see it. Okay, you have to think about price action. You need to know how to read price action, right? This is pretty neutral, right? So they're probably both going to work if they set up, as long as the sells are setting up at resistance and the buys are setting up at support. Okay, so this one, it's really close. If this purple bar was right here, I'd say for sure you could buy like a retest. But this bar in between, I'm not certain that works out. Whereas this one is usually okay, right? This would be an example of one that might stop. If you thought this was bullish and you thought this was support, then you got a sell sign, purple buy sign. That's usually good enough. Technically, if you want to be real technical about it, what you want to happen is you want this entry bar to be up here It's just that these bars are so big. Oh, sorry, above this point of control. You want it to break above this point of control because otherwise that point of control of the diamond bar can become resistance. See that? It becomes resistance. So that's the one thing to keep in mind. But like I said, even if you mix that up, it's still going to work a ton. So okay, that here's the same thing where there's that one missing, and then it's purple. So I would need to trap this guy, like that. Now he's trapped. So now if I pull back in there and give me a aggressive signal up, I would buy. If this had a star, I would buy it. This one. If this had a star or a green bar or something like that, I'd buy this for sure. See this one, pink bar. Sorry, white diamond, pink bar, right next to each other. Trap them, and you're good to go. It doesn't happen right away, but they're trapped here. Point of control's below. Right there. That's your sell. Not much, but gets you something. Let's see. No, wrong way. Okay, one more. See when it gets, so this is clearly bearish, right? You really don't want to tempt this bull. It's like this would need a pink bar to be bearish, so it's not bearish here. And then you get, if you thought it was now bullish, and then you get this with two purple bars, like it's, I don't hate buying that, but technically you want to get above this, right? So if you mark it off and say like, this is where I need to break back in, that's when you're clearly bullish. Now you just need to pull back to get in. Right there. That's your buy. There you go. You get a nice little push, right? So the key is just to recognize that all we're trying to target are these little ranges, because it's so much easier to estimate what the market's going to do right here than it is to estimate like where the market's going to close, right? Like just saying like what's the likelihood that we're going to break this low, or what's the likelihood that we're going to get back to this high, you can be pretty precise there if you have these certain patterns. See, this followed by this means that if we break underneath that, it's bearish. If we trap this guy, it's bearish. If this would have been a sell signal, it would have been very close to breaking this. I might have just taken it. And it's not wrong to sell that. It's just aggressive. The most conservative way to do this, again, is to let them break it and then sell on the retest. But if you want to sell this, or if this turns into a star and you want to sell that and just kind of get a rush on it, as long as it's bearish, it'll work a lot. So have fun with that. I am going to get some rest. If you guys want more information on the trade and perform algorithm, the one I was working on earlier, the easier one, so not mine, but the one that mine's based off of, this one, right? The simple one. If you want more information on how to get a hold of that, how to learn how to use it, how to join our trading room, you're going to email my coach, Simon. His email is trade, the letter N, and the word perform. So tradenperform@gmail.com. That's Simon. Tell Simon you follow me and that I promised you a free week in the room. He will gladly oblige and answer all your questions. I'm in the room 3 days a week on Tuesdays, Wednesdays, and Thursdays. Happy to answer your questions too. There's obviously no commitment. If you just want to check it out and see if it's for you, that's fine. The only thing we ask is that if you're going to come visit the room, that you just be respectful and like watch and listen and just kind of try to learn first before you like throw out a ton of questions because it takes time to learn any new skill. And just like when you first learned how to read a candlestick chart, you probably didn't see all the patterns the very first day, but a couple weeks of working on it, and suddenly a bull flag is not that hard to recognize. So it's the same kind of thing. It's just new information. We do have a ton of free videos and stuff like that on YouTube, on either my YouTube or else on Simon's, because you can look up Tough Trader, TOUGHTRADER. That's Simon's YouTube channel. He's Trade and Perform on Twitter, and I'm at Redbend Trader on Twitter. You can always DM me on Twitter too if you got questions. I'm happy to share whatever will help you decide whether or not it's for you or not. Like I said, we're a small group of committed futures traders. We are all very professional and serious about trading. Everyone comes from different places around the world. We got men and women, but we're all focused on trading the process. So if you want to learn how to trade more consistently and get a process where you can trade the same trade every single day and just run the system and be consistent, this is a perfect room for you, right? If you, on the other hand, want more of a social hangout where you poke fun at everybody and put memes out there and brag about how great your day was, if that's what you're looking for in a room, you're not going to get that with us, right? And there's no reason to pay the fee monthly if you're just looking for a social connection. There's other, go on Discord, there's other ways to get some of that social time. But if what you're interested in is actually learning how to trade and not just following someone's calls, but figuring out how to do this yourself with a scalable, objective, systematic way of trading, I've not found another room like the Trade and Perform room. So definitely recommend you check it out. And I appreciate you guys watching the video. I will try to do another one next week. Let me know in the comments or on Twitter. You can just DM me if there's anything specific you want to learn about. I'm happy to do videos about whatever people want to learn about. As long as it's something that I have expertise in, I will share it. So I will talk to you guys.